Hi, good afternoon, everyone. Start of the financial year, just about a few days into the financial year, and we have a new regulatory requirement from the RBI. This is not unthought of or unheard of, or probably something for which we were not prepared, because there were indications that this requirement will be imposed on all retail lending transactions. But usually, as it invariably always happens when there is a regulation, we normally find that the fine text of the language of the regulation contains surprises. And this time as well, at least we have been able to see quite a few surprises. Initially, we thought, well, there is not much of matter to talk about, therefore we'll probably do a 15-minute kind of a recorded session. But as we went into studying this, we found there's quite a lot of intrigue. And as we kept on probing further, the complexities seemed to be getting larger and larger. And that's how we thought we'll probably reach out to you all and invite you also to contribute to help us to understand if there are things that we think are complicated, but you all think they are not as complicated. So that's the idea. Basically, this is, as you can imagine, this is fairly recent. We've just been studying this. We are hoping to learn from this collective exercise today. And I think with this, I'll straight get started. Right. And we'll start as usual with something to keep us on track. We'll start with the PPT. Anita, if you can maybe present the PPT. Right, so let's get started. This is what we're going to do today. We'll start with what is KFS. We'll talk about the scope of applicability. When we talk about scope, we'll talk about which all lenders are covered by it, for what kind of loans does it apply, where all, of course, it does not apply. And quite a complicated question, seemingly, is it applicable to home loans as well? Because there is a similar requirement of most important terms and conditions, so-called MITC, in case of home loans already. So is it intended to be applicable to home loans too? Everyone seems to be intrigued by the use of the word retail lending. So what exactly does retail lending mean? RBI said this would be applicable to retail lending, MSME lending. And because this is replacing the requirements earlier there in case of digital lending, therefore there is an incorporated reference to digital lending too. So it would apply to digital lending. And in case of banks, it applies to loans to individuals. So in context of all of you, I think the question basically is what exactly is the scope of the word retail lending, where this particular regulation is applicable. From point of view of logistics, the question comes, how is the KFS to be given, at what stage, in what form? Do we get an acknowledgement of the KFS? Then how do we go about doing the loan execution? In terms of loan journey, where does the KFS get interposed in the entire loan journey? And of course, a very critical question is what happens to the good old sanction letter? Because we have, I think almost everyone has a sanction letter, particularly those in physical format always have a sanction letter. Those in digital format, well, the sanction letter is almost like a screen which is shared with the customer, and the customer, of course, signed digitally saying, I agree. So that's a sanction letter, come loan agreement, come whatever. But what happens to the sanction letter? Are we saying the KFS replaces the sanction letter, or the KFS is on top of the sanction letter? A very important question comes, is the KFS binding on the lender? Having issued the KFS, it seemed as if from reading of the RBI's circular, which talked about a validity period of the KFS. And it says that the lender will not have a discretion in changing the terms of the KFS during the validity period. So are we saying within the validity period, the lender is almost committed to lend, so that if the borrower says yes, the lender then cannot back out and has to give the loan as such. So that's it. Does it have a binding force? A very important question. The regulator has expressed the KFS as a standardized form. It's a standard form, standardized. The moment you talk about standardization of any form, we're basically saying what? That you don't need to apply your mind in creating your own form. There is a standard form that the regulator has created. The idea basically is to impart comparability across lenders. Therefore, if I as a borrower, I get a KFS from one lender, I could probably have a similar KFS from another lender, because the two are similar. They are not like differentiated. They are not arcane. They are not mutually uncomparable. Therefore, it imparts a comparability, simplicity, and transparency to the entire process. The word that we quite often use these days is STC, simple, transparent, comparable, which is what is the whole idea in case of retail lending, that the terms are simple, transparent, and comparable. So is the format standardized? Can we therefore add, delete? Can we incorporate further clauses? Can conditionalities? Can we say subject to this, subject to that, etc.? Or the form is the form and we just need to swear by the form? That's another question. Now, these were some questions which we thought are relevant, but to tell, and I think all of you would probably agree, and you'll probably agree more when we get into some further details into it, is that the most important question is the computation of APR itself. How is the KPR computed? I think all of you are from the lending world and you probably compute APRs and IRRs even while you are sleeping. You can compute IRR in matter of jiffy. But here the definition of APR goes for a significant change because it says the APR shall be inclusive of all charges from the borrower, including, remember, including third-party charges. That is, even the payments that you collected for payment to third parties, if the lender is collecting those, then those are also supposed to be part of the APR. That's exactly where the complication comes. And I think in real world, computation of APR is always fraught with so many different variations. What if I'm making disbursement in tranches? What if there's a moratorium? What if I'm disbursing on the 15th, the payment starts on the 1st? That there's a broken period, 15 days period in between. Thereafter, the payment would be on, let's say, monthly intervals. What if I allow a flexibility to the borrower? For example, the borrower can pay between the 15th and 27th. Variety of options can be possible. The fact that we are aiming at a simplicity, transparency, and comparability does not mean we will not allow a scope for innovation at all. The whole idea is transparency, but that doesn't mean that your loan terms or ability to innovate beyond what the RBI officer might have thought of is completely ruled out. So we'll need to talk about what are the nuances of APR computation. We will also be discussing, we'll also intend to discuss the effective interest rate for accounting standards, that is for accounting purposes, and the APR. Are they different, or is the APR the same as the EIR for accounting purposes? So there would actually be as many as 3 rates, or in fact 4 rates. There might be the loan rate of interest, the rate of interest for the loan purposes. There would be an APR because there is a particular regulatory mode of computing the APR. We compute an EIR, which is used for accounting standards. And then sometimes lenders also have an internal basis called yield or effective rate of return. That's maybe your own internal computation as to what is the effective yield. Third-party payments, of course, will attract a lot of discussion. We'll be intending to discuss this at length. And then the disclosure requirements, because as we disclose the KFS, we will also be required to disclose the computation of the APR also. That computation sheet also will be forming an annexure of the KFS. How will the loan journey look like, and how does the cooling off period? Cooling off period is a term which is relevant, as I'm sure all of you understand, in case of digital lending. There is a validity period in case of KFS. That's applicable to all. Wherever you have a KFS, there is a validity period. What is the implication of the so-called validity period? How does it compare with the cooling off period? What are the actionables? You have time till September 30th. And therefore, we are now in mid-April, almost past mid-April. But does that mean we have easy life from now until September 30th, 5.5 months still? But our understanding is that there'll be quite a lot of work because systems will probably need some updation. Therefore, need to gain understanding, particularly the APR computation. I think in different sectors will require tremendous intensive discussions. I'm sure you'll all agree that this is so very product specific. This will probably be different in case of vehicle loans, and different in case of personal loans, and different in case of digital loans, and different in, and I'm sure going back discussions and questions today will probably get more complexities of the APR computation. So if there is a computation required, the computation will have to come from the system. The system will therefore have to be adapted to throw the APR as we go for any loan proposal post September 30th. So all this is a journey. It would probably require some time, some preparation, some work, and therefore the time is to start working on it probably now. I can understand definitely that you'll all be busy with financial statements, but once you're done with that, then you'll probably have to start working on this. And then how does it apply in case of co-lending or loan sourcing arrangements? That's what we intend to discuss today. Let's continue discussing. Anita, if you can just maybe move to the next slide. Right. Slide down. Right. Background. I don't think we need to spend a lot of time on that, because as we understand, the statement on development and regulatory policies of Feb 2024 had talked about the imminent KFS. It's now been introduced. The circular dated 14th of April, right? 14th of April promulgates it. This is a step towards harmonization. The moment you talk about harmonization, it's a standard KFS which is applicable to banks, applicable to NBFCs, applicable to HFCs, applicable to all regulated entities in respect of those loans where it applies. So wherever it applies, it's common across regulated entities. And it therefore, to the extent there is a new KFS requirement, it replaces the applicable rules earlier. In case of banks, wider the circular on display of information by banks. Digital lending also to that extent is amended. And likewise, the regulatory framework for microfinance also got amended. So there are amendments in different regulations. It's applicable from 1st October. Like we said, it's intended to have a simple, transparent, and comparable format. So the terms of the customer need to be communicated upfront. It allows the borrowers to make comparison, and that's the whole intent. That's the idea of the KFS. Anita, if you can help to move slide down, please. Right. And it's a standardized format to be at a glance view of the all-in cost of the loan, the interest rates, the fee charges, repayment terms. APR is not the only thing. There are plenty of things. There are a lot of contents. I'm sure we can go through that. Repayment terms, some qualitative information. For example, will I have a right of assigning the loan? Will I have a right of repossession? Do I have a collection team, etc.? The references to different clauses of the loan agreement. Loan terms to be compared. Any fee charges which are not mentioned in KFS cannot. This is very important. Whatever fee charges are not mentioned in KFS cannot be charged at any stage, except with the other than the so-called contingent charges. Contingent, for example, a default interest, you cannot be mentioning. The rate of default interest is still mentioned. Those rates are still, those wouldn't be part of the APR computation. But whatever contingent charges are there should be mentioned in the KFS, because you cannot charge what is not mentioned. This is again a very important thing. That would mean you think of what all things you can load on the borrower throughout the term of the loan, and unless it's a borrower obligation which you are discharged, that's like we discuss in case of insurance cost later. But if there is an obligation which can be passed on to the borrower, do mention it. There are contingent charges of XYZ nature. Whatever is not mentioned in KFS cannot be loaded on the borrower at all. Lender is bound by the term. This is something which we call the so-called validity period. We'll discuss further. KFS to include computation sheet, amortization schedule of the loan. This is obviously expecting that the loan is amortization schedule, meaning how would the loan amount get reduced to zero. Obviously, as we discussed further, that this would be applicable to amortizing loans only. It's applicable to term loans only. The KFS thing doesn't seem to be applicable to lines of credit. Question, is it applicable to a bullet repaying loan? If the bullet repaying loan is also a retail loan, the fact that it's not amortizing, it's term loan still. It does not have to be repayable in EMIs or EPIs. The RBI uses a standard term called EPI, equated periodic installments. Periodic installment may be fortnightly, for example, might be weekly, for instance. But the fact that it's not amortizing, let's say it's a bullet repaying loan, that does not mean it wouldn't be covered by the KFS, as long as it's otherwise covered by the scope of applicability. Even though it's non-amortizing, it's a bullet repaying loan, it would still be hit by the KFS requirement. And the KFS will also be included as a summary box as a part of the loan agreement too. Anita, if you can just slide down. That brings us further to the scope of applicability in terms of lenders who are covered: commercial banks, including small finance banks, all primary urban cooperatives, etc., non-banking finance companies, all of them. NBFCs are all covered, irrespective of whether you are mid layers, base layer, etc. You're all covered. Housing finance company, that would be. I mean, we'll be coming back on why are we saying that it's applicable to home loans too. Housing finance companies are also covered. So almost all regulated entities are covered, and the scope of loans which are covered includes retail lending by all regulated entities, term loans to MSMEs. Retail lending, what does it mean? We'll discuss further. Term loans to MSMEs. MSME, basically the borrower happens to be MSME, and you are targeting getting the benefit of MSME lending. Borrower is an MSME, but you're not getting one of the MSME certifications from the borrower. You're not going for Udyam filing, etc. Then you probably, I mean, you're not even calling the loan as an MSME loan. So if the borrower is, though actually MSME, but you're not attaching the relevant certificates, then I don't think you are taking the position that the loan is MSME loan. But if you are taking the position the loan is MSME loan, in that case, the circular is applicable. Loans by scheduled commercial banks to all individual borrowers, if the borrower happens to be an individual. This is actually very important because earlier when we started, we thought maybe it's not applicable to loan against shares, mostly given to individuals, less. We thought it may not be applicable to, let's say housing loans initially we thought. But as we discuss further, it seems that the borrower is an individual, it should be applicable. We'll discuss it further. Digital lending, it is covered. Microfinance loans, it's covered. Is it applicable even to an LSP who is displaying the information on behalf of a lender? Answer is very clearly yes, because LSP is disclosing relevant information on behalf of lender, on the authority of the lender. Therefore, whatever is applicable to lender is also applicable to the LSP. Therefore, it's applicable to the disclosures done whether by lender itself or lender on a digital lending app or lender through an LSP. It's applicable in all those situations. I will be happy to pick up questions. So if you have questions as we go, you need not probably think right on the chat, as it would be hard for us to read while speaking, but we'll be happy to cover questions as we have little windows of Q&A as we proceed. So in terms of applicability, the critical expression is what is the meaning of the term retail lending? Anita, if you can maybe therefore slide down. Slide down, please. Okay, we go back later, but let's first discuss what exactly is the meaning of retail lending. So the word retail lending is not defined either in the circular gives a cross-reference to a master direction on interest rates on advances 2016 circular, saying words and expressions not defined here will take the meaning from the 2016 circular. Neither does the 14th April 2024 circular define what is retail lending. Then we go to the 2016 circular, which is referenced in the 14th April circular. We do not find definition of retail lending there as well.
RBI has in the so-called XBRL formats in the past, we have used the word called personal loans, consumer loans. We have used those kinds of words, but we haven't used the word retail lending as a part of regulatory vocabulary. In RBI's XBRL formats, we don't find a word retail lending. So we're wondering, what does the word retail lending mean? In the 2016 circular, which is referenced in the subject circular, when I say subject circular, I'm meaning the KFS circular, it has used the word retail loan, then within brackets says such as housing loans, auto loans, etc. It says such as housing loans, auto loans, etc. That would mean housing loans and auto loans are implicitly or understandably included in the meaning of retail loans in the 2000 Master Circular, so 2016 Master Circular, which is cross-referred for the purpose of meaning of words in the KFS Circular itself. That's one basis for trying to find what could be the meaning of retail lending. Then we go to a couple of other RBI publications. For example, there's an RBI publication on study on retail lending portfolios of scheduled commercial banks. And there it says retail credit refers to, this is the RBI publication. It's not a regulation, but one of the RBI sort of, let's say, papers, research papers. Retail credit refers to loans given to individual customers or households for various purposes. So retail is used in contradistinction to wholesale. Wholesale lending in banking parlance means what? Lending to businesses, lending to corporates. Retail lending basically in banking parlance, as far as we understand, and many of your bankers here, so you could probably give your thoughts as well. In our understanding, wherever the borrower happens to be an individual, that's taken as retail lending. Whether a borrower happens to be a business, let's say an LLP, a company, a partnership firm, it's not seen as retail lending. It may still be covered by this circular because it's MSME. The borrower happens to be MSME. But the retail lending, the expression retail lending is in our understanding taken to mean lending to individuals, depending therefore on the borrower. Similarly, there's another RBI publication which talks about dynamics of credit growth, and there the word RBI says refers to loans given to individuals for housing, loans against properties, purchase of vehicles, consumer durables, loans against gold jewelry, personal loans, educational loans, credit card. By the way, credit cards are specifically excluded. So for credit cards, we have a specific exclusion, but the retail credit or retail lending itself has a very wide applicability. So in our view, the following types of loans are captured as retail. All kinds of vehicle loans, auto loans. You give it for a personal vehicle, it's covered. You give it for a commercial vehicle, it's covered. The loan is given to an individual, very surely. The loan is given to an HUF. I think it would still be covered. Just the fact that the borrower happens to be HUF doesn't mean anything. Doesn't mean it's not a bunch of individuals. Loan given to two co-borrowers, it would still be covered. Loans given to a partnership firm, if it's MSME, answer would be yes. Partnership firm meaning it's a business loan. It's not a loan for individual loan. It's not a loan to an individual, but a loan to a business entity. Assuming it's a loan to a partnership firm, unless it's an MSME loan, if it's MSME, it would be covered otherwise because that's the next coverage. But otherwise, if it's a vehicle loan, commercial vehicle, taxi, personal vehicle, it would be covered. Two-wheelers, very surely yes. Educational loans, mostly given to students, are anyway covered. Home loans, by virtue of whatever discussed, we'll discuss it further as well, but it is covered in our view. Loans against shares given to individuals, definitely yes. Loans against properties, if given to individuals, yes. Loans against any other securities, fixed deposits or debentures, anything else which is loan to individual will be covered. So in our view, the exclusions will be business loans, that is loans given to business entities for business purposes. Lines of credit, because it's talking about term loan. If it's LOC, what's the difference between LOC versus term? Term loan is a particular term. You can pay it in three. You can pay it either in periodic installments, or you pay it in one single tranche, one single bullet, end of X number of years. It's not a self-renewing line of credit. If it's a self-renewable line of credit, in our view, because the word is very clearly term loan, it's a revolving line of credit. Sometimes lines of credit also behave like term loans. For example, I've given a line of credit for 1 lakh. You draw 20,000, paid in 6 months. Then you draw another 30,000, paid in 6 months from the date of drawal. Then the remaining amount you draw and you pay it within 6 months from the date of drawal. So this is actually not an LOC. It's a sanction amount in 1 lakh, but you're drawing, as in when you draw, it becomes a term loan for X number of months. I hope I'm coming clear. If you're given a so-called sanction limit within which every disbursement will then become a term loan, then such term loans will also be covered by the KFS circular. A line of credit, which is like a revolving LOC that you draw up to 1 lakh, use it, pay it back, then use it again, swipe it again. For example, what happens in credit cards, that is understandably not covered. Loans to corporates other than MSMEs are not covered. Dealer financing not covered. Builder finance, because that's also for a business purpose, unless it happens to be an individual borrower. In our view, we would not be recommending using a literal or narrow interpretation of the word retail loan to wriggle out types of activities from the KFS circular. The whole idea, the whole intent is that the idea basically is transparency, the idea is comparability. If the borrower is not an initiated borrower, he should be able to compare the terms of the loan, should be able to understand what is being offered, he should be able to compare the terms of loan with competing options. And the whole idea, therefore, should be to extend or expand the scope of applicability instead of narrowing it down. So we don't recommend taking a narrow view of the word retail lending. If you can go back, Anita, because we talked about retail lending, and yeah, just the next slide. No, the next one. The circular, we were exactly, yeah. Move down. Right. October 1, now this is sanctions made before that date. It's applicable from 1st October. That would mean sanctions made on or after 1st October will be covered by the circular. For example, sanction was done before 1st October, but the loan agreement is entered after that. It is not applicable. Is it applicable to, now this is a very interesting question once again, is it applicable to existing loans which are renewed after 1st October? If it's mere renewal of something which was already granted, no new terms are being offered, no new limit is being extended, there is no question of the borrower saying, yes, I agree, etc. That would mean if there is no sort of, let's say, fresh deal with the borrower, it's an existing deal which is just being, it is just getting extended. There's no restructuring, no new limit, no new terms, no new rate of interest, no new period. That would mean there is no need to go to the borrower to seek his I agree kind of confirmation. Well, if there's nothing to seek fresh confirmation, there's nothing to demonstrate also. KFS basically you are putting on table what is on offer. If what is on offer is already with the borrower, there's nothing is being offered as of now. There's no question of going for a fresh KFS. But wherever there's a new offer to the borrower, that would mean the new limits, increased term, whatever else, even though it might be for existing loan, then KFS would be applicable. Because a renewal of a limit, extension of a limit amounts to a fresh loan. Therefore, that would, for example, you had so-called, let's say, demand loan, and you are now renewed. That's almost like a new loan because you now renewed the loan for a further term, and therefore KFS should be applicable. So wherever there's a question of fresh disclosure of terms and fresh acceptance from the borrower, KFS should be applicable. Anita, if you can slide down, please. Some further questions on where all does not apply. To. So question is where all does apply. We talked about HFCs. We'll discuss it further as well. Business loans except MSME, dealer financing. But these are points that we discussed. Is it applicable to credit facilities provided by merchant? That is not a regulated entity. Surely not. Is it applicable to BNPL? BNPL is consisting of two parts: a dealer himself giving a credit period, and thereafter the regulated entity giving a loan. To the extent a regulated entity gives a loan, it would be applicable. Is it applicable in case of bundled facilities? I'm giving a loan plus I'm providing some other service. To the extent you're providing a loan, it would be applicable. Good on. We talked about housing loans, and let's once again be clear. We've given the background as to why we think home loans are covered. While we understand that, I'm not sure whether the RBI actually intended to apply to home loans too, but they've addressed the circular to HFCs. HFCs could be given other forms of loan as well. In case of home loans, MITC has been there for several years now. And therefore, MITC itself is some form of KFS only. But If the RBI wanted to say that home loans are not covered, I guess they would have said so. I think, therefore, see, in absence of any clarity, that's what I'm saying. In absence of any clarity, we think it's applicable to home loans as well. We are not able to see a reason why it's not applicable. And because MITC continues to be applicable, therefore, we are also saying that this KFS requirement comes in addition to MI. It's applicable. Both are applicable. That would mean until there is a clarity on this, we hope and we will be very happy if there's a further clarity. But as it stands, KFS and MITC would both be applicable. So as we said, the scope, therefore, in case of all digital loans offered by whoever it's applicable, MSME lending. What is lending to MSME? MSME basically is a definitional. What is MSME is defined? Anita, if you can just go down to definition of MSME, that which is going by turnover. So as long as you are giving a loan to a micro entity or a small enterprise or medium enterprise, which is based on turnover, and you are intending to take benefit of MSME lending, let's say for priority sector purposes, etc., or you're availing one of the guarantees given by the government agencies. If you're intending to take benefit of MSME lending, and therefore the borrower is an MSME, the borrower is given relevant certification that it's MSME, the loan is an MSME, and therefore, in case of all MSME lending also, the circular is applicable. Anita, if you can go down, please. Anita, I would suggest at this stage, maybe you talk about some of these, and then I'll come back when it comes to APR. So in the meantime, you can take it over.
Right. So as we were discussing the applicability on different kinds of lending, specifically if we look at the circular, when the statement of development and regulations was issued by the RBI, they intended to extend this applicability on MSME lending and retail lending. Earlier, in case of digital lending, this was already introduced. So digital lending, whosoever is doing digital lending, be it banks, NBFCs or MFIs, they will be issuing this kind of a KFS to their borrowers. Now, what has happened is that the format of KFS as well as the APR computation, that has to be aligned with the requirements under this particular circular. Loan to individuals given by banks, NBFCs, HFCs, be it digital or physical, both are getting covered. So digital was already covered, but physical, because we are covering retail lending over here, so all the loans that we are extending through any mode of lending to individuals will get covered. To corporates, in case we are doing physical lending and it is other than MSME, that is right now not covered under the regulations as such, because the regulations specifically are covering MSMEs only. So MSME term loans are specifically covered. So in that case, if we are extending loans physically or under the brick and mortar model, if it is being extended either by banks and NBFCs, though it is not covered, but since given that the larger part of our lending is as it is getting covered by the new requirements, it is suggested that even in case of lending to corporates through physical mode, the requirements may be implemented. Retail lending, we have already discussed. Digital lending, we all know that it is something which has to be decided whether a lending is digital or not. And it is subjective because it depends upon the use of digital technology for the lending process. The major part of the lending, the significant part of the lending, mostly the credit decision making, if it is digitalized and if we are using digital technology for extending such loans, it will be classified as digital lending, and this will be applicable on the lender. So even if the KFS is displayed on the DLA or the DLA belongs to the LSP, they will also have to abide by the regulatory requirements over here. It will be issued by the lender or the RE who is giving out or extending the loan on the DLA, but the DLA as well as the LSP will have to comply with the requirements. Microfinance loans are also covered. Microfinance loans are loans that are, earlier it was MFI, specifically NBFCs, MFIs were extending these kind of loans, and for other than MFIs, the limits, there were limits on the quantum of MFI lending that can be done. Now the regulations also, it is not just restricted to NBFC MFIs, but the regulations are applicable on any lender who is extending such loans. Such loans would mean collateral-free loan given to households whose annual income is less than 3 lakhs. So if we are extending such kind of a loan, that also gets covered here. Now, under the MFI circular, earlier there was a requirement to provide a fact sheet. The fact sheet would give the key terms of the loan. It would display the key terms of the loan to the borrower. Now that will be replaced with the KFS format, the APR computation, which was not there under MFI lending. The APR computation that has been suggested under this particular circular will also become applicable in case of MFI loans. Now, how is the KFS given? The key fact statement that we have been discussing till now, at what stage are we giving this key fact statement? Because we do understand under the loan journey, if we see, let us come to the loan journey, which is shown over here. Okay, this is the loan journey. Now, in case of a physical lending, if we see, the loan application is the first stage wherein we are providing the customer applies for the loan. Thereafter, the identification documents are submitted by the customer. KYC checks are being done. The credit assessment, evaluation and everything is being done. Based on the credit assessment, the lender actually decides the applicable rate at which the lending will be done. The charges and everything is dependent on this. So once the credit assessment and evaluation is done, at this stage, we actually issue the KFS. Now, key fact statement is nothing but similar to the sanction letter. So we would not say, since this is a standardized format, so we cannot tamper the format, we cannot make additions or deletions in the format. But what we can do is we can issue this along with the sanction letter itself, because KFS would give me the terms of the key terms, the interest rate, the charges, and the key terms, the qualitative terms of the loan. We also have a validity period once this is issued. So similar to a sanction letter which is issued by a lender, if I issue the sanction letter, I am saying that yes, the loan has been sanctioned to you and it is valid for a certain period. Now, the validity period of KFS implies that the lender is bound to stick by the terms that it has disclosed in the KFS. When I say that the terms disclosed in the KFS, I am binded by that terms. What does it mean? We'll also discuss that what is the binding part over here. But during this validity period, if the customer agrees to the terms, the loan will have to be extended on those terms. The lender cannot deny the fact that the loan will not be disbursed. So once the KFS and the sanction letter is issued, it is acknowledged by the borrower. The validity period is over. During the validity period, if the customer has accepted, then upon this successful verification, the acceptance of the KFS, loan agreement is executed and the disbursement is done. What happens in case of a digital lending? Since the entire process is very spontaneously happening and the customer application, KYC, underwriting, everything is happening at the back end, the KFS also gets issued very along with the credit underwriting. Once it is done, once the terms are finalized, the KFS and sanction is issued, the acknowledgement is taken, and the loan agreement is executed. We have to understand that specifically in case of digital lending, there is a cooling off period as well. So the customer is not just given the validity period, which is the timeline within which it can think, compare the terms and go through the KFS and then decide whether the loan has to be taken or not. But along with that, once the loan has been disbursed, even after that, there is a cooling off period that needs to be provided to the customer in case of digital lending, wherein the customer may decide to opt out of the loan without any prepayment charges. So this is there in case of digital lending. Now, we were discussing when is this KFS required to be given and in what format. So this is where we are giving the KFS, which is before we execute the loan agreement. And in case of digital lending, before the signature on the agreement, on the loan agreement, because in case of digital lending, it may not be physical signing. It may be just a click, wrap signature or a I agree kind of a click that I do. So before that, on the terms of the loan that I take the acceptance from the borrower, I should see that I have shared the KFS or the sanction letter with the borrower and I take that acknowledgement from the borrower. The RBI specifically in case of all communications with the borrower has been saying under the Fair Practices Code as well that it has to be in a language understood by the borrower or in a vernacular language. Now, in this case also, the KFS has to be given in a language understood by the borrower. In fact, the RBI also says that you need to make sure that the borrower has understood the terms and you take that acknowledgement from the borrower. How is it possible in case of a digital lending wherein I'm not actually interacting with the borrower? What usually we do, even for application form or sanction letter and loan agreement, to make sure that the borrower has understood, we take a declaration that yes, what is your preferred mode of language? We usually suggest that while in the DLA itself, in the application, the lending application itself, you take that kind of a declaration at the onboarding stage, which is the preferred language, and thereafter ensure that all the communications with the borrower, sharing of all these important documents from application to KFS, sanction letter, loan agreement, is done in that same language. This will ensure that yes, the borrower himself declared that this is the preferred language and all communications are being done in that language. So we are assuming that the borrower has understood. Once the KFS has been shared, we also take an acknowledgement. So the lenders will also be required to take this acknowledgement, which again can be in the digital form itself, in form of a I agree or I accept that yes, I have understood the terms of the KFS. Now, what is the timeline to provide? Is there any time period within which the KFS has to be issued? So in digital lending, since there is no tangible time gap between application and execution of loan agreement, hence we can just disclose that at the upfront itself. So the KFS can be disclosed along with the application or the sanction letter itself. Make sure that it is done before the execution of the loan agreement and the disbursement, because this is the initial phase wherein the key terms have been given to the borrower, and the borrower is given a time to decide on the key terms. So this has to be before the loan agreement or the actual lending is done. In case of non-digital loans as well, the KFS may be shared along with the sanction letter. We already discussed that yes, it will be issued by lender. In case of co-lending, it is usually one of the lenders acts as the sourcing agent or the upfront face who interacts with the borrower. However, the KFS should be issued by both the co-lenders. It could be a common format wherein the logo of both the lenders are provided in the KFS document. If you see, the KFS format, in fact, also requires you to disclose the name of the co-lending partner. Now, usually what happens that in case of co-lending, at the stage at which we are disbursing or we are giving this kind of a key fact statement, we are issuing this key fact statement to the borrower, who will be the co-lending partner is not decided, because there are two types of co-lending model. There is discretionary co-lending, non-discretionary co-lending. Even in case of non-PSL loans, there could be a stage that the key fact statement has been shared upfront, but the credit evaluation or certain documents from the customer is still pending, and the sanction will happen post the verification of those documents. So at that stage, the co-lending partner is yet to be decided. What happens? How do we share those details? So in the KFS itself, if we look at the format, the details of the co-lending partner has to be disclosed over there. So maybe the list of various co-lending partners that we have, we can maybe link it to that particular link, wherein since we also have to disclose it on our website, so maybe we can provide that kind of a list that yes, it can be out of these co-lenders, that one of them will be a co-lending partner. If at this stage of KFS, it is not decided who will be the co-lending partner. Now, KFS needs to be displayed and additionally sent to via verified email ID and SMS. This is specifically applicable in case of digital lending. Also, the blended rate of interest has to be disclosed in case of co-lending, wherein the KFS specifically requires this kind of a disclosure. Acknowledgement of KFS, this is important because the contents of KFS, once you have explained to the borrower, the acknowledgement has to be taken, either in case of a digital loan by click wrap, or in case of a physical loan, it could be a physical acknowledgement or a simple signature from the borrower that yes, I acknowledge to have understood the terms of the KFS.
Anita, if you can just
yes.
go back to that, right?
Yes.
and B on the co-lending bit. First, there was a question. I think it's easy question for you to answer, which is if somebody is signing by putting thumb impression, how do you make sure that the KFS has been understood by the borrower?
So I think the thumb impression is then being used in case of physical lending because KFS has been understood or not. I have to explain him. So what I understand, if it is a thumb impression, then it is a physical lending that is being done. So in physical lending,
I'm sure digital lending, no one can say that I was not able to read. How do you approach a digital lender otherwise? So let's think of physical lending. Somebody is signing by putting thumb impression.
Right.
How do we get the confirmation that KFS has been read and understood? Answer would probably be as you get a declaration from someone else who says, I have read the terms and conditions of the loan in the language understood by the borrower. And then the person signs it. The person who read it also signs, and the borrower also puts his or her thumb impression. That would probably be applicable in case of KFS. In other words, the confirmation of KFS will be exactly in the same way as the confirmation of the agreement itself.
Right.
When you talk about co-lender, you mentioned that the details of the co-lender would be mentioned.
Yes.
Quite often, as we are giving the KFS, we don't even know who the co-lender would be. We have a co-lending arrangement with 6 people. It's so-called discretionary co-lending. After I've originated a loan, I'll take the bunch of the loans to different co-lenders. I'll go shopping for some co-lending partner. Whoever agrees, I'll place the loan with that co-lender. Sometimes the gap between the date of origination and date of placing with the co-lender could be a little longer than, say, a fortnight. So how do I write the name of a co-lender and the co-lender's rate of interest when the terms of the co-lending are not even known on the day of origination?
What I would suggest is that since we already know the co-lending arrangements that we have with different co-lenders, since we know that yes, we have co-lending arrangements already in place with say XYZ 3 different lenders, maybe we can give that indicative list of co-lenders that yes, your loan will be it is definitely a disclosure that is required at the KFS stage because the format specifically requires you to say whether this will be co-lending or not. So we can maybe give that kind of a indication over there itself that yes, it will be co-lended, but who is the exact co-lender, the list may be provided and it will be out of any of these co-lenders.
Probably say then it would be coming, because as far as the borrower's rate of interest is concerned, the borrower needs to know for sure what the rate of interest is
the blended
going to pay. I mean, so blended could customer's rate of interest cannot change. My own payout could change depending on what is the rate at which I'm able to get the co-lender, but the customer's rate of interest cannot change at all.
Right.
So all that I could probably say that the name of the co-lender would be communicated, let's say within X number of days, because on the day of giving the KFS, I may not even know who the co-lender is. And the co-lender's rate of interest, typically what happens, the borrower's rate is anyway frozen. The borrower's rate cannot change. What would change, therefore, is my share in the rate of interest. And therefore, I think that's the only way to suitably accommodate a so-called CLM to a discretionary co-lending in the context, in the format of KFS. Otherwise, it would be hard to give the name of the co-lender in the KFS itself. What would you think?
Yeah, maybe that also can be a view that can be taken then.
Right. You can maybe move on, and I think there are some other participant questions. There are, in fact, 6 or 7 other questions by the participants, but we could probably go through the questions only after we have dealt with some further content, and then we can come to the questions.
Okay. So we were also discussing, since this is a standardized format of the KFS that has been prescribed by the regulator. Now, under the format, we see that there are terms that we have to disclose, all the interest rate, the charges and everything that needs to be specified over here. Now, is these terms, can these terms be changed once I have already issued the KFS? So the answer is no, because the terms of the loan or the interest rate, the charges and all of these, the tenure, the EMI computation, the APR computation, these are the terms of the loan. these cannot be changed once I have issued the KFS. Now, because there is a validity period, the borrower has the discretion to say, to agree to these terms or decline these terms. If agreed, the lender is bound to follow the terms. So I'll have to lend only on those terms. Now, is the lender also binded that yes, I will lend or I will have to enter into this lending agreement if the borrower says yes to the KFS terms? Here we have to understand that lending is dependent on the credit evaluation of the borrower. There are a lot of documentation requirements. There are a lot of, you can say, credit appraisal requirements that the lender undertakes before the actual disbursements. We usually say that as precondition to the disbursement, which is also very clearly communicated to the borrower that upon submission of say so and so document, very clearly in case of housing loans, it is very common that you need to get certain sanctions and you need to submit certain documents before the disbursement happens. So in those cases, the lender cannot be compelled to disburse the loan if these conditions are not satisfied. Now, where can I mention these conditions? These conditions can be specified in the sanction letter that I'm issuing along with the KFS. So I am bound by the terms of the KFS, which is the terms of the loan. But those terms are applicable only if the preconditions are satisfied by the borrower. So if there are preconditions for the credit evaluation, credit appraisal process, and if there are documentation requirement, details are required from the borrower to be submitted, if those are satisfied, it is only then can the lender be said that yes, I'll have to disburse the loan or I'll have to enter into the loan agreement. Otherwise, the lending itself cannot be said to be a mandatory lending on part of the, it is not a committed, you can say, it necessarily need not be a committed line that the borrower has committed. It cannot be a credit facility that the lender has committed. And the sanction letter can very clearly say that if the borrower fails to submit those documents and details, the lending will not be done.
With this, let's elaborate this a bit further, Anita. The stages, and I think you talked about the loan journey. There's a loan application, then there is a credit evaluation, and then there is a sanction, right? And then there is issuance of KFS. Can I therefore take the position that I have issued KFS without sanction?
No,
Can I say that the sanction will follow? This is not a sanction, sanction will follow.
right.
So you agree to the terms, I'll then go and take sanction. Is it possible that way?
It is possible that the KFS is actually the terms of lending that I'm saying.
Terms of lending means what? That I have agreed to lend. I've agreed to lend. These are the terms, and I'm here stating the terms.
Yes.
If there are some pre-disbursement, the pre-disbursement requirements may be there.
Right.
Post-disbursement requirements may also be there. There might be requirements pre or post-disbursement. But to say that I haven't sanctioned, but I'm still issuing KFS, that seems little, self-conflicting, because to my mind, yes, you are not forced to disburse. But have you agreed to lend? I would say yes, because that's how, when you issued KFS, then all internal approvals would already be in place. Therefore, to say that, well, I'll now go and take the sanction of my credit sanctioning authority only after you sign the KFS, I don't think that's very proper.
It is only dependent on the documentation requirements. I can only say that these are the preconditions that you need to satisfy.
And if those conditions are satisfied, I cannot say your loan has been turned down because my sanctioning authority did not. So therefore, sanction is already in place.
Right.
There are preconditionalities. There are post-conditionalities as well. There are PDDs and post-disbursement documentation. There might be some conditions precedent as well. If you fail those, then the loan wouldn't be disbursed. Like in case of home loans, you mentioned disbursement would also be dependent on stage of construction. Now, no one can know, but that's a third-party dependence. But as and when construction progresses, you are bound to disburse. You cannot say that I will not disburse. Therefore, to an extent, as somebody says, is it a committed facility? It is committed. It is committed, however, may be subject to certain conditions, which may be stated in the sanction letter. Would you say that's the correct position?
Right. And that is the reason we were also suggesting that the KFS is issued along with the sanction letter, because these conditionalities can then be mentioned in the sanction letter. Okay, now as we discussed, we are not removing the relevance of sanction letter. It doesn't become irrelevant because sanction letter is still there. KFS is the summarized version of the terms. It is disclosing the some of the qualitative information. It is disclosing the interest rate and other charges information. However, there are other terms also, other significant terms also that will be disclosed under the sanction letter. And these conditionalities also in relation to the loan will be a part of the sanction letter. There are normally several conditions, commonly known as the pre-disbursement or post-disbursement conditions. Each of these will also form part of the sanction letter.
Okay,
And then,
Sanita, if there are questions around sanction letter, come KFS, I mean, whether KFS constitutes a binding offer or not, would we not take it up right at this stage?
yes,
And
yes.
people are posting questions on the chat, but I think if you so feel like, we can also enable participants to unmute themselves and speak up the question too, if at all you think that helps, but whichever mode you prefer. So co-hosts or hosts, if you can maybe, where need be, somebody is raising hand, you can probably unmute them as well. I just saw a question saying, can I issue, and hosts and co-hosts, please also seek questions on sanction letter or KFS. If I am unable to read, they could probably read them out and help us to understand the question. The question is, can I issue a KFS cum sanction letter? One single statement called KFS cum. If all I want to issue is the KFS, then the KFS itself is good enough. But normally the purpose of issuing sanction letter is that there are certain other conditionalities or obligations which are not a part of, because KFS is standard. माने KFS में छेड़छाड़ नहीं करना था, आरबीआई ने बताया ये स्टैंडर्ड है, बस मैंने बता दिया वैसे करो. तो KFS से लोहे की लकीर हो गई, इसमें कुछ इधर उधर add, alter, additions. I don't think the RBI would be happy if you start tweaking the format, because then the standard comparability itself will go. People start crafting their own KFS formats, then it's hardly comparable. So KFS, let's not tweak or tinker with. But if you want anything else in good English language that you would like to state, you can put it in the part of sanction letters. I wouldn't recommend having a joint KFS that wouldn't serve the purpose. However, you can always have a sanction letter, and the KFS could be an annexure to the sanction. In case of digital lending, as Anita was mentioning, sanction is done, your loan is sanctioned, here is a KFS. If you agree, then you sign here. I think that all these three things. And if you sign, then you're probably signing on terms and conditions of the loan. That would probably be another box which you click or tick and say that I've agreed to the terms also. So all of these three things may be embedded in several screens which come one after the other. Idea basically is that you told the key fact statements in exactly the same format in which the RBI expects you to say before you ask the borrower to tick and say that I've read the terms and conditions, I agree to the loan itself. Colleagues, is there any other question on on whatever we discussed so far, so that we can discuss those before we proceed to the content? I think very interesting discussion is still to follow on the contents of what would APR computation imply. So any other questions? Can somebody read, or Anita, if you are able to read, maybe discuss.
Yeah, so there's this question. So can we share ROI in KFS only and not in sanction letter? I think that should not be a problem if the terms in the KFS already, certain terms which are there as per the format already captured in the KFS, in the sanction letter, you can simply refer that yes, the terms that are mentioned in the KFS, and along with that, the sanction letter may then need not repeat those terms and can just give the additional terms. And also this is the same question. KFS will be issued before issuing the sanction letter. Then what is the use of mentioning the validity period of KFS? So we are not saying that KFS will be issued before the sanction letter.
After or along with sanction?
APR computation, yes, we will be
APR will coming exactly after.
Is LSP details need to be captured in KFS format? I think we'll discuss these questions maybe when we take up the format. Just one thing before we go to the APR computation is KFS and MITC. In case of housing loans specifically, there is a requirement to disclose MITC as well. So this also, till there is any further clarity by the regulator, because we were trying to compare the requirements that are there under MITC and the KFS. So MITC has certain additional disclosure requirements like the purpose of loan, the security collateral details, features of insurance policy, conditions for these disbursements. These are additional requirements that are disclosed under MITC. So MITC will not become redundant. That will still have to be shared with the borrower along with the loan agreement in case of housing loans. And this, I think we have already discussed that, yes, the intent of the RBI is to make it STC, which is simple, transparent, and comparable. That is what the KFS requirements, that is the purpose for which the KFS requirements have been introduced. So now we'll do the APR computation. Sir, maybe you can discuss this.
Right, APR, annualized percentage rate. The term is not unfamiliar because in fair lending practices too, the RBI is all the time been talking about APR. When digital lending guidelines were issued, it came with the stipulation that APR will be including all charges other than contingent charges levied on the borrower. Before that, the position that we were taking was that APR basically is the cost of credit. So whatever is logically, legitimately part of the cost of credit, only that needs to be included as a part of APR. And people had different views and versions on what all will be included as a part of APR. This term APR is used in various jurisdictions. There are definitions, elaborate definitions provided by regulators in other countries as well. In one of our recent write-ups, I think a couple of days back, we uploaded an article where we have done a cross-jurisdictional comparison on the meaning of APR as well. That article was in context of whether zero interest lending is actually zero interest lending. And there we discussed what's the meaning of APR too. So if you're interested, you could probably read that article as well. As of now, our intent here is to understand what all will be included in APR computation in the as a part of the KFS circular. All-inclusive cost and margin, cost of funds, that is cost of funds, whatever is the cost of funds, credit cost, operating cost, processing fee, verification charges, maintenance charges, most importantly, third-party charges. Third-party charges are also included. Now, this is something where in the past we have not been including third-party charges as part of APR because we are taking the position that third-party charges we are recovering on actuals. We are paying it, but we are recovering it on actuals, which means we are exactly paying the same amount to the third party. For instance, let's say we're collecting insurance premium. We are collecting the premium, we are paying it to the insurance company. Probably we pay the same thing to the insurance company which the borrower pays. Likewise, there might be, let's say, documentation charges, etc., which we collect from the borrower. They are paid to third parties, and they may be paid on actuals basis. Sometimes they collected on more than actual basis, because usually the lender, for example, is a documentation charges 1,000. I don't think they pay 1,000 on documentation. Most of it is standard. The lawyer would probably be paid some 250 rupees, but the charge on the borrower is 1,000. So there is a spread inherent, but the regulator goes to say that even if third-party charges are on actual basis, even then it would be part of APR. So we're saying two things. Third-party charges will be part of APR, even if they're collected not on actual basis. Third-party charges will be part of APR all the more when, or even if they're collected on actual basis as well, whether on actuals or not on actuals. If the lender is collecting them, they will be a part of APR. This leads us to a whole lot of discussions. I'm just going to get into the discussion. Also, some bit of Excel work. I mean, showing how will this computation look interesting. You'd probably see that this would actually make a lot of difference in terms of how are we disclosing APR in different loans. So I'll come to the Excel sheet, but let me just once again talk about what all will be part of APR. So let's maybe take the case. I'll talk separately on third-party charges in some length, but I'm hoping that the screen is visible to you. You can probably see the screen. If you want me to magnify it a bit further. Right. Think of, let's say, loan amount of rupees 1 lakh.
Yes, sir, it is visible.
And then let's talk about this part first, third party payments, and then we talk about, right. So let's say loan, let's talk about a vehicle loan. Let's say commercial, any kind of a vehicle loan. Cost of vehicle is 1 lakh is understatement, but let's say the cost of vehicle is 1 lakh. Normally, the vehicle is bought by way of a chassis. If it's a commercial vehicle, particularly chassis is bought. Body building is done separately. Let's say the cost of body is 40,000. The lender agrees to fund the cost of body as well. The registration, other upfront costs are 10,000. GST on each of these, because GST would be applicable on each of these, is let's say now GST on the body and GST on the chassis might be different, but I've taken it oversimplistically, applying the same rate on each of these three. I understand that the cost of furnishing or furbishing, cost of body might attract an 18% rate. The vehicle itself might attract 28%, but I'm not on GST complexities here. Therefore, I've taken the total vehicle price to be 1,92,000. You let's say agreed on a loan to value ratio of 80%, so you'll be funding 80%. 80% of what? 80% of the cost of the vehicle, 80% of the cost of the body, 80% of the cost of furnishing, and 80% of the GST on the vehicle. Normally, you would have paid, or you would be paying, you would be funding the GST component on the vehicle as well. To the extent you are funding 80% of the aggregate cost. So in essence, we need to see what's my loan amount. 80% of the entire cost, I've taken it that way. 80% of entire cost. So I've taken 1,53,600, namely 80% of 1,92,000 as the loan amount. Up to this, there is no APR complexity. Now we come into elements which might impact the APR computation. So let's say we have processing fee of 1%. 1% on the loan amount, therefore 1% of 1,53,600 amounts to 1,536. Remember that if your processing fee are computed, let's say you would have probably said I would collect an ad hoc processing fee, just mention the amount. Here I've taken 1% of the loan amount, therefore I've taken 1,536. Let's say you're collecting another 1,000 by documentation charges. Let's say you're collecting another 1,000, call it by inspection charges, whatever charge, 1,000, appraisal charges, whichever charges. And then you're collecting, let's say, from the borrower, an insurance premium as well. Now, when we say third-party charges, and remember, I'm coming back to further discussion on what is the rule for including or excluding third-party charges. But as of now, what I'm saying is the insurance premium is payable by the borrower to the lender. Lender pays it to the insurance company. Borrower pays the insurance cost to the lender as a part of the conditions of the loan. So this is coming as a condition of the loan, that the borrower will pay insurance premium to the lender. How much insurance premium? Let's say he pays the upfront, whatever, 3,000 rupees. Remember, my numbers are still illustrative numbers, so I'm not exactly sure as what is realistic estimate of the insurance cost. But let's say 3% insurance premium will be payable to the lender. Lender in turn will pay to the insurance company. You could have actually done it such: the borrower pays insurance premium to the insurance company. Borrower pays insurance to third party itself. It's not routed through the lender. In that case, we wouldn't be concerned with third party costs. Third party charges are charges which are paid to the lender by way of reimbursement of what is paid by the lender to third parties. It's routed through the lender. Lender is collecting that, right? You would of course call it separately. You're giving it a separate name. You're in accounting parlance, you're not treating the insurance premium as a part of a finance income. I'm completely in sync. We are not including the insurance premium as a part of financing cost or financing charge. It's a third party payment. It's accounted for separately. It's received as insurance premium to be paid to insurance company, and it's knocked off by paying to insurance company. But because you are collecting it, it's an obligation that you're casting on the borrower. The borrower is obligated as a part of the condition of the loan to pay insurance premium of 3,000 rupees to you. Therefore, it's a part of the third party charges. I've taken this little further into little complexity. We'll discuss that further. That maybe the borrower will also be required to pay you that insurance premium at end of year 1, end of year 2, end of year 3 as well. So that is something that I'm adding here as a complexity, which I'll discuss later. As of now, I'm deleting that. And the borrower therefore pays you 3,000 rupees upfront for the first year insurance premium. Next year, we'll talk later. And on the charges, whichever charges you're imposing, including the insurance cost, including the inspection charges, documentation charges, processing fee, there is a GST. There's no GST on the interest, but anything other than interest, there'll be a GST. So you're charging 18% GST on each of these other costs. Which other costs? These costs. You are charging GST on each of these costs. Which all? Insurance I have not included because I guess insurance you are acting only as an insurance agent. So I don't think you are actually that might probably what you call your pure agent when it comes to insurance. So I have not included GST on that, but on the processing fee, documentation charges, inspection charges, I've loaded 18% GST too. So in other words, the borrower will pay the charges and the borrower will pay you 18% GST on these as well. Now, what is your ROI or rate of interest? Assuming the rate of interest is 14%, so you're talking about 14% rate of interest. Tenure of the loan is 48 months. Now, you would compute EMIs at this rate of interest. Obviously, computation of EMI is based on ROI rate of interest, 14% on a loan amount of 1,53,600. These extras are anyway extra. They are not included in the EMI computation. EMI is separate and the upfront charges are separate. So on the loan amount of 1,53,600 at a 14% rate for 48 months, your EMIs are computed 4197. And for a minute, assume that there will be a broken period charge. For example, the disbursement happens on, let's say, 16th of the month, and your EMI will be starting, let's say, from the 1st of the month. Then there's a 14% broken charge also. Will the broken period charge impact APR computation? Probably yes, because as your APR itself is different from ROI, return rate of interest, it might impact the APR computation as well. But I'm assuming as of now the broken period is at the same rate, 14%. Now look at the computation of APR. See what all things we have taken as a part of APR computation, what all things we have not taken. So we've taken 1,53,600 the loan amount, the actual loan amount, 1,53,600. Then I've taken the upfront processing cost, 1,536. I've taken the documentation charge, 1,000. I've taken the inspection charge of 1,000. I have taken the third party payment of 3,000 rupee insurance cost as well as a part of APR computation. I have not taken, remember, I have not taken the GST on these because it's very clear GST is something that I'm collecting for payment to the government. I'm not including GST on the charges as a part of APR computation. So I'm including upfront charges by whatever name called, processing fee, documentation charge, inspection charge. I'm including the third party payment insurance costs as well. I'm not, however, including the GST on either or each of these because that is something that I'm collecting for payment to the government. Net of taxes, the payments are net of taxes, meaning I'm not going to include GST as a part of these. So that's how we compute the APR. I've applied the rate formula. You can have an IRR formula. The IRR rate is just give the same result. And multiplied by 12 to annualize it. Annualize, as you can see, the word is annualized percent. Therefore, I multiplied by 12 to annualize that. I get a rate of 16.39. Remember, my rate of interest is 14. Borrower gets to see APR of 16.39. If the borrower is comparing that with a competitive quote, he would look at not 14, he would look at 16.39. And why is it 16.39? I think it's very clear as you understand. It's 16.39 because of this. If I were to delete that, the rate drops down to 15.28. The upfront insurance cost, which is actually a payment to third party included as a part of APR, is making a substantial difference on the representation of the cost to the borrower. Like it or not, that's how the RBI makes it clear that if you are routing insurance payment, you are receiving it. If you are collecting in the name of insurance company, the check is made in the name of insurance company, it's a third party payment going to a third party. You might be the corporate agent of the insurance company. Therefore, the payment may be going to the insurance company, but if you are getting the payment into your bank account, it's being paid to you as third party charges. It's then a part of the APR. Now, we have discussed this, the computation of APR. I'll go further and talk further on what all APR includes and doesn't include. And then we'll be happy to have a discussion around this. So let me go to the Right. So what is included and what is not included? What is not included? Contingent charges. Contingent charges, for example, let's say penalties for default, penal charges, anything else, prepayment charge. Prepayment charge, for example, is also contingent. Repossession cost, contingent charge. Check bouncing charge are contingent charges. These are not included in APR computation. Late payment charges, cross-selling of third-party products directly to the third party. Payments are made directly to third party or simply cross-selling. For example, let's say I am buying life insurance for the borrower. I mean, I insist the borrower should do a life insurance. The payment is made by the borrower to life insurance company. It's a third-party payment going to a third party, not routed through me. It's not captured as part of APR. Security deposit, it might impact the borrower's cost. It might impact my yield also. But if the borrower is paying a security deposit to me, I take it as an independent cash flow, not taken as a part of APR. Is the timing of payment from the borrower going to make a difference? For example, borrower makes all payments in advance or in arrears. EMIs are payable at the beginning of the month or EMIs are payable at the end of the month. These practices are there in many among many lenders. If the EMIs are payable in advance rather than in arrears, it will impact the APR computation because we're computing APR by applying the IRR formula. So when we use the IRR formula, if the payments are coming at the start of the month, meaning the first payment comes immediately, it will impact the APR computation. Therefore, fact of advance payment will have to be factored in computation of the APR. Is it XIRR or annually compounded rate or a simple annualization? It is not XIRR. Let's be very clear. It is not an XIRR. If the payments are coming at unequal distance of time, and therefore IRR formula itself is not applicable. I hope those who are well versed with financial computation would understand that IRR formula presupposes that the gap in terms of time between two payments is uniform. Consecutive payments are coming at the end of each month, end of each quarter. The time gaps are consistent. Very often that may not be the case. For example, one disbursement happens on 15th of April, next payment comes on 30th of April, thereafter disbursement happens on 16th May. There might be diverse dates on which disbursements happen, the payments are made, in which case we need to compute what is called XIRR. It's a what do you call annually, it's a daily IRR compounded to year. We are not referring to XIRR. If at all you're computing XIRR, you need to transform it back into a annualized rate because this is simple annualization. As you could see in my computation, I computed the IRR for a month and multiplied by 12 rather than compounding it to a year. I did not compound the IRR to a year. I simply multiplied by 12. So it's not XIRR or annually compounded rate. It's a simple process of annualization by multiplying number of periods by number of periods in a year. So will broken period make a difference? Because the APR itself is different than the IRR. If you're having broken period interest, which even though it might be at the same rate of interest as the ROI itself, it will still have an impact on the APR computation. Will prepayment charges be a part of APR? Answer is very clearly no, because it's a contingent charge. Now we'll talk about some of the charges and see whether they'll be, most of these are basically different names that we give to different charges. Administration charges, it will be included. Credit verification of field visit charges will be included. But if you say I did a field visit, decided to decline the customer, then it doesn't form a part of KFS at all. It will form part of KFS only if you decided to go ahead. Now, borrower might have actually paid that field investigation fee already. So that's why I was mentioning earlier, and I think I'll be mentioning that the fact that the borrower is making this payment at a particular point of time, borrower is required to make a payment, let's say 15 days before sanction. Borrower is required to make this payment immediately on sanction. Borrower is required to make payment, let's say 1 month after sanction. That doesn't make a difference. Timing of the payment by the borrower does not make, whether the payment was done before sanction, after sanction, before KFS, after KFS, does not make it. Please, let's be very clear. Merely because the charges were paid by the borrower before the sanction will not make a difference. If it was a part of your aggregate loan offering, that there would be a field investigation for which the borrower has paid, that would be part of KFS still. That part of APR still. Documentation charges, mandate registration charges, processing charges, filing with NESL, stamp duty. I have a different perspective. I'll just talk about that in a minute from now. So I'll just park it for a minute and come back on stamp duty. Surcharge charges, you are registering with surcharge. So valuation charges, if you are collecting, you are engaging a valuer, you are collecting valuation costs, even though you are saying you're collecting on actuals, it would still form part of the APR. In case of home loans, etc., these are significant costs. Stamp duty can be used. I'm just coming to that therefore separately, because stamp duty on a property registration can be used. Mortgage costs can be few lakhs. So I'm coming separately to that. Let's now spend little time. I think the most intriguing part in the entire APR computation is third-party payments. So let's maybe discuss at some length. So loan may include, say in case of vehicle, a cost of body building, cost of furnishing, registration cost, stamp duty on hypothecation, insurance cost. As common question, if it's done by the vendor, body building, who is supposed to make payment to the body builder? Is the lender making a payment to body builder? No. These are costs that would have been incurred on the borrower. But for the loan also, the vehicle would have undergone body building. So as long as the payment was due from the borrower to a vendor, irrespective, it's not a part of the loan offering. I mean, I'm not offering body as a part of my loan. You need to buy a body built vehicle, so buy it separate. That's up to you. Buy a body built vehicle, buy it separate. That's a part of your decision. So body building is not done by lender. Neither is the body. My payments go to lender, to a vendor, or to an OEM anyways. I'm paying to the chassis supplier also. I'm paying to the body builder as well. That's the payment that I'm making by a disbursement process. It's not a part of loan offering, and therefore there's no question of adding this. Lender may finance it. It's not a part of the APR. Similarly, furnishing not a part of APR. Registration cost is paid by the borrower to motor vehicles authorities. Therefore, this is also merely a disbursement which is happening through the lender. It's not a part of the offering of the lender, because any vehicle, irrespective of who buys it, will have to be registered. Stamp duty, the question is it paid directly? It may be paid with or without lender fund. That would, you might be funding the stamp duty cost as well. Very often in case of home loan, stamp duty cost is added to the cost of the house. But is the cost paid by borrower to the stamp authorities? Borrower makes a payment, let's say, how is stamp duty paid? Mostly it's paid towards, I mean, online payments are made these days. As long as the payments are coming from the borrower in the or. So my suggestion is, because this is a little gray area, so I would suggest collect these payments from the borrower directly in the name of the stamp authorities. Instead of you collecting and you making the online payment, please collect it in the name of the stamp authorities directly, so you can eliminate all questions. The question wouldn't remain. Otherwise, the question will always be lurking. And if you add stamp costs, say in case of home loans or mortgages, the impact on APR can be used. So as simple as that, please collect it from the borrower in the name of the stamp. All you need to do is get an online payment to be made by the borrower. You fund it, you disburse to the borrower, he makes an online payment. You insist that he makes it and shows the receipt, after which you make the rest of disbursement. So why unnecessarily bring it into your books and have any confusion on the stamp duty? Insurance cost, is it paid to the lender? If yes, and the lender pays to insurance company, if yes, it then forms part of the third party payments and will form part of APR. Now for insurance itself, I can think of various, I have thought of some options. I've thought of 4 or 5 options. I'm sure you will be able to think of a lot more. It's a part of the condition of the loan that a borrower will insure. See, typically what will a vehicle loan agreement say? Borrower must at his own cost insure the vehicle and keep the vehicle insured. Traditional clause in any vehicle finance agreement has always been, the borrower agrees that the borrower will insure the vehicle and will keep the vehicle insured at all times. So who is supposed to insure? The borrower. Who is supposed to pay the insurance cost? The borrower. To whom? To the insurance company. You could probably say to the insurance company selected by me, but the payment is going from the borrower to the insurance company. The borrower is at least supposed to pay. In which case, though I am making it a condition of the loan that the vehicle will be insured, but the payment is going from the borrower to the insurance company. It's not coming to me. Therefore, to my mind, it will not be a part of third party payment, because it's not a payment collected by the lender. It's a payment enforced by lender in joint interest of both. One cannot say the borrower is not interested in the vehicle. Borrower is as much interested as me. But the payment is going from the borrower to the insurance company. To my mind, it will not be a part of the third-party payments. Sometimes the agreement also says that in the event the borrower does not insure, in that case the lender will pay and will seek the reimbursement. That becomes contingent, because you are paying in the situation where the borrower does not pay. Borrower fails to pay, then you pay and seek reimbursement. So to my mind, in that case, it will not form part of the third-party payments. Paid by borrower to insurance company, but with a loan from lender. I give a loan with which the borrower pays to insurance company. This is a very tricky part. The lender gives a loan for the insurance premium. Which insurance premium? The first year insurance premium, maybe the second, third, fourth also have given a loan. With my loan, the insurance premium will be paid. So actually I'm doing what? I'm funding the payment of the insurance premium. The premium is paid by the borrower to the insurance company with my loan. In other words, I have two loans now. A loan for the vehicle, a loan for the insurance premium. In my view, even in that case, it will not form part of APR. Why am I stressing so much on this? I'm saying this third party, as you saw in the APR computation, the third party payments have a substantial difference on the way the APR looks like. A borrower looking at your APR, a borrower looking at your competitor's APR might be, and you're talking about a retail borrower, he might be completely dissuaded looking at a 2% hike in the APR because of third party payments. Therefore, you need to be very careful. I think practices will probably have to evolve. Because now there is a KFS which requires third-party payments to be incorporated, practices may have to evolve to make your lending still sellable. So if you're giving a loan with which the borrower is making payment to insurance company, you might still be the corporate agent. In each of these cases, you are the corporate agent. So you're getting your agency commission from the insurance company. A good 32% you're getting back from the insurance company. But the payment is made by the borrower to the insurance company. In that case, in my view, it will not form part of the third party payments. If you are making payment and you are collecting from the borrower, it will form part of the third party payment, even if you are collecting in the second, third, fourth year as well. Which is why, if you recall, in my Excel sheet, I had a scope for entering second year, third year insurance premium as well. If you're saying I will be collecting in form of EMIs, right? And I will then pay first year, second year, third year insurance. If you want, I can go back to the Excel sheet where I had a present value of the 3 years insurance, which I loaded as a part of the disbursement to compute EMIs. In my view, in that case, the initial insurance, the first and second year insurance also will become part of the third party payments and will therefore be incorporated in the APR computation.
So will there be a difference if the payment is not collected from the borrower, but it is a part of the loan amount itself and it is being funded by the lender?
I'm collecting EMIs.
Right.
So like
So
I said, insurance premium, whether, well, if it's paid separately by the borrower to the insurance company, I'm not in picture. If I'm collecting in form of EMIs, I say I've given a separate loan. That would mean there's a separate loan given by me for which there are EMIs. Borrower is making payment to insurance company with my money, with my loan. No question, because that's a payment going from the borrower to the insurance company. If I am collecting, like in my example, I said first, second, third year insurance I have present valued and added as a part of the loan, because henceforth now I will be paying the premium, because I'll be bound to pay the premium because I've already included that in the EMIs. In that case, it will form part of third party payments. I am once again stressing that quite likely accounting wise, it will not form part of your EMIs. You can still segregate the cost and take it separately in books of accounts. Quite likely it will not form part of your effective interest rate computation as well. But for representing to the borrower, you will have an all-inclusive APR, which includes this third-party payment as well. So the key elements to include payments as a part of APR. Now, this is very important. Therefore, I'll just state it very carefully. While computing APR, the focus is on the borrower's cost, not on your cash flows. Remember, sometimes you might have your own outflows. Somebody might probably come back and say, I am making a payment, I'm giving payment to, let's say, broker. Should I net it from the borrower's inflows? Let's say I'm making a payment to underwriter, broker, I'm making self. Let's say I'm not collecting from the borrower, but I'm paying to the valuer. Should I deduct it from the outflow? No, because the focus is on the borrower's cash flows, not your cash flows. The focus is completely on what are you requiring the borrower to pay, not on your cash flows. Therefore, lender's cash flows or the timings of lender's cash flows are not important. Once again, making important point. For example, you show the disbursement is done on 1st of April, but you have a credit period from the vendor. Therefore, you are actually paying to the vendor 3 months later. For the purpose of APR, should I take this disbursement as in the month of July or in the month of April? I would still take the disbursement as on 1st April. But like I mentioned, I am concerned with borrower's cash flows, not with lender's cash flows. If you got a credit from a vendor for APR computation, you will still take the disbursement on the day on which you are supposed to have made a payment. For example, 1st April. Lender collects costs from a third party. Should the lender consider this the outflow to a third party? Lender makes payment to third party, right? In which, let's say I'm paying to a broker, no question of including. Lender is collecting money from a third party. Let's say I'm collecting from a vendor OEM. I'm getting some payment, some subvention from the OEM. Will it form part of APR computation? Surely not. So while not collected from the borrower, lender may have third party costs like agency costs. These are not incorporated. Because like I mentioned, the focus is only on the borrower's cash flows, not on the lender's cash flows. And the considerations based on which we will or will not include elements as part of APR is the cost pertaining to the loan or subject matter of the loan. Cost is pertaining to the loan or the subject matter of subject matter means, for example, if it's a vehicle loan, the vehicle. The cost is pertaining to the loan or the vehicle. That is, but for the loan, was the borrower expected to incur the cost or the cost is collateral to the loan? Like I said, the cost of furnishing, cost of bodybuilding, etc., cost of registration of vehicle. These costs would have anyway been a part of the vehicle cost. They are not part of my loan offering. These are part of the vehicle supply. I am not a vehicle vendor here. I'm a lender, not a vendor. So I'll look at loan cash flows, not a non-financial cash flows. Is the cost a cost on the? Am I loading this cost on the borrower? Answer is yes. Is the cost recovered by the lender? Is the cost recovered by the lender whether it's a part of EMIs or separate, irrespective of whether I'm collecting this cost separately or adding them as a part of EMI. For example, the registration cost, processing fee, etc. I might have actually capitalized them and added as a part of EMI also. I might have capitalized each of them and made them a part of the aggregate disbursement. In that case as well, it will form part of APR. Is the cost non-contingent? Contingent charges like prepayment, default, check bouncing, etc. are not part of APR. Is the cost collected from the borrower now or in future? Even if you say, let's say, like I said, insurance cost. I would say pay 1 year insurance now, pay next year insurance at the end of 1 year, third year's insurance at the end of 2nd year. Even in that case, if you are collecting it from the borrower, no matter what is the timing may be before disbursement, after disbursement. Like I mentioned, let's say inspection charges, facilitation charges, these might be paid even before the KFS is issued. Even then, they will form part of APR. Lender is collecting the cash flow. Does it matter whether lender is paying the same amount and at the same time to third party? It does not matter. Payments are made to a third party. Those are part of loan contract. Is it a part of the payment are made directly by the borrower to a third party? Like I said, lender insists that the borrower should insure the vehicle. The cost is paid by the borrower to the insurance company, not to me. I might be corporate agent. It may be part of my commissionable payments, but it will not form part of the third party payments. So little further on that, if these charges attract GST, GST will not be included in the APR computation. In case of disbursements in multiple tranches, how will APR be computed? Let's say I'm disbursing money in multiple tranches. Let's say in case of home loans, disbursements happen in multiple tranches. How will the APR computation be done? IRR computation allows you to have the cash outflows at different points of time. So you will write the disbursements exactly as they happen, and compute APR based on the actual disbursement date. I would have actually shown quickly the example of that as well. So let me just share how would that computation work. So in the same computation which I was showing earlier, disbursement made in tranches, for example, let's say loan amount of 1 lakh. Disbursements happen in 3 tranches, 20,000, 50,000, 30,000 in 3 different tranches, end of first month, second month, third. Here I'm assuming that I know when will the disbursement happen. In case of home loans, you wouldn't even know, because at the time when you're issuing KFS, you would not know when will the disbursement happen. So that's you will be saying based on actual disbursement. You will not be able to say when disbursement is done, because you will not even know that. You'll basically say whenever disbursements happen. Charges payable by the borrower on sanction. This is payable upfront. This 2,000 is payable right upfront, and the 24 EMIs will start when the disbursement is completed. In this case, EMIs are based on the amount with this interest during the pre-completion, pre-disbursement period. Therefore, this 1 lakh rupee becomes 1,01,052. Why does it become 1 lakh? Because we are disbursing in tranches. So we would have compounded the disbursements at the same rate of interest, the 14% rate of interest. To find the compounded amount becomes 1,01,000, on which we compute EMIs. Then there are 24 EMIs which follow. So you can see I have written the disbursement. This 2,000 rupees upfront, which is the processing cost, is paid at 0.0. Disbursements happen month 1, month 2, month 3, and then the EMIs start for the next 24 months, and therefore the APR comes to 15.97. Needless to say, if this upfront charge of 2,000 wasn't there, if this was 0, for example, the APR would still be 14%. Why? Because I am compounding at the same rate as the rate of interest itself. So this impact on APR is not because of the gaps in disbursement. The impact is because of the processing cost. See, 2,000 rupee makes a huge difference, 15.97. The rate jumps to 15.97 because we're just talking about a 2-year loan. Had it been a longer loan, the impact on APR would have been lesser. So that's how the computation. So APR computation is quite interesting, quite intricate, and I think a lot of work on systems will still have to be done to arrive at proper. So how does APR capture moratorium? Similarly, like I took disbursements in tranches, I can take moratorium as well. Depends on the moratorium period. It also depends on whether the interest during moratorium will be paid or will it be capitalized. APR will be computed based on PMT formula. Now there's a little computational issue here. When you compute EMIs, let's say the amount comes in fractions. Let's say the amount comes to 4324.45. That's how it will come. If you use any Excel formula for PMT, you'll probably find the number comes in fractions. You're not collecting money in fractions. You're collecting from the borrower not 4324.45. You're collecting 4325. So will your APR be based on the actual PMT computed by Excel, or will it be based on the rounded amount of 4325? RBI's computation is basing it on the fractioned amount, which is actually incorrect. Because if a contract says that you'll be paying me 4325 every month, that's the contractual cash flow. In my view, the APR should be based on the actual cash flow, not based on the fraction amount which you are anyway not charging. So the algorithm for deciding third-party payments is, are the services unrelated to facility? In that case, exclude them. For example, you, let's say, offering some other service which is not a part of the bundled loan, part of the loan contract. That's anyway separate contract altogether. It's not a part of the loan offering. Collected by the third party directly, in which case also not a part of APR. Collected by the lender and passed over to third party as a part of APR, it will be part of APR. If you're paying it on actuals, then you are supposed to be giving a receipt. If you're collecting it not on actuals, in that case, you're not even supposed to give a receipt. Your accounting IRR or EI, effective interest rate, and APR are different. Which is why I'm saying system changes will be required, because you have an effective interest rate which is used for accounting purposes. You have an APR which is purely for disclosure. Iska APR ka use kya hai? Will the APR be used for accounting purposes? No, APR is merely for the KFS. इसका जो यूज है यहीं पे खत्म हो जाएगा. KFS में डाला, बात खत्म. It's not the rate based on which your loan amortization will be done in future. No, loan amortization will be done based on ROI, rate of interest, not based on APR. APR is simply a field in the KFS for the borrower to make comparison. Neither will it be relevant for accounting interest rate. Effective interest rate is also different, because effective interest rate for accounting purposes is based on the lender's cash flows, whereas APR is based on the borrower's cash flows. So there are several things which are forming part of EIR, which are not forming part of APR. For example, loan origination cost. You are sourcing the loan from somebody else. Let's say the payment that you make to an LSP forms part of EIR. It's a part of the EIR computation, but it's not a part of APR computation. Anita, maybe you can talk about the contents of KFS. But in the meantime, if on APR there are questions, we could probably discuss them here before we go further to the contents of KFS.
Yeah, I think because there are a lot of questions
On the APR itself.
Yeah, and
Right.
related questions, yes. So maybe I can read out the questions for you to address them.
And if anybody wants to, let's say, unmute and speak up, that's
Yes.
always possible. So you can do a hand raise and speak. Yeah, go ahead.
Okay, so in a nutshell, if we have to say, APR will include third-party charges, specifically insurance charges, if such charges are capitalized through though lender may transfer it to agency as a corporate agent. Please confirm understanding.
Nutshell, से बाहर निकल गया. Sorry. In nutshell, I think that algorithm which I had said, is it routed through the lender is collecting money from the borrower as a part of the terms of the loan. It's then a part of third party. Whether you're paying on actuals or paying it on less than actuals, if you are collecting and you are paying, if you're forcing the borrower to pay to the insurance company, no, it's not part of third party charges. But if you are collecting and that would mean you have undertaken the burden of insuring. A, you require the borrower to insure. B, you insure it and collect the cost from the borrower. In the second example, it will be a part of APR.
And connected.
Normally, I'm unable to put things in nutshell. Nutshell में ये 2 घंटे का webinar कैसे चलाएंगे? Nutshell में things will put. Sorry.
Just a follow-up question on the same thing. So if the borrower pays insurance premium directly to the insurance company instead of the lender, this will be considered for computation of APR, as this is also a cost to the borrower for the loan, irrespective of it being connected with the loan.
If it's paid by the borrower to the insurance company, and that's a mandatory condition. There's a lot of things the borrower will do. Let's say the borrower has to do fire insurance, vehicle insurance. Borrower will need to maintain the vehicle. Borrower needs to do this, that, do that. There are 20 different obligations. Those are not part of. They're not payment coming to me. As a part of the obligations of the borrower, there might be various obligations. Borrower needs to insure the vehicle, but borrower is making payment to the insurance company, not to me. Therefore, it's not part of my cash flows.
And how do we
borrower's cost to me.
And how do we compute the APR if there is a moratorium of 60 days and then there are regular monthly?
While writing the IRR computation, we'll write after during 60 days, am I charging interest or I'm capitalizing interest? Let's say I'm charging interest, then I defer the outflow, but in the meantime, I've taken interest as an inflow, and then we'll write the EMIs, and then we compute the IRR. Other option is the interest during moratorium might be capitalized. That would mean the disbursement amount will go up. Like in my case, I was showing the disbursement amount had gone up because I had compounded interest on the disbursement during the 3 disbursement tranches. So in that case, the EMI is computed on the compounded amount. Well, if you are writing this on Excel, it's very easy to compute APR in spacing the inflows and outflows exactly based on how they happen. We will compute the IRR.
So this is my question, a follow-up question on this itself. If I have to compare it between 2 lenders, the other terms being the same, the rate of interest, charges and everything, and if one lender is providing a moratorium of 60 days and the other lender is not, will I see a difference in the APR?
Of course. As long as the APR is different from the IRR.
Right.
Usually the APR is different from the IRR because of the upfront charges. So in that case, so like I said, if the rate of compounding at which you compound interest during moratorium is the same as the IRR. So technically, the moratorium should not make a difference on IRR. Like I hope I showed that in the computation that APR, irrespective of disbursement happening in 3 tranches, still came to 14%. I hope you could see that here. Disbursement is happening in tranches. However, if I did not have this upfront charges, disbursements happening in 3 tranches, compounded amount at 14%, the APR still comes to 14%.
No, but
ROI is
here
14.
we are talking about the repayment moratorium. So will that also?
Will have exactly the same rationale, because the rate at which I'm compounding and the rate at which I'm discounting, IRR is the rate at which I'm discounting.
Right.
And I'm compounding at the same rate. Therefore, timing of cash flows has no impact at all on the IRR. However, because the APR is different, so let's say the moment I put 2,000 rupees or whatever 1,000 here, the APR is different. The moment the APR is different, timing of cash flows will make a difference, because I'm compounding at 14 but discounting at 15.97, so it will make a difference.
If second year and third year insurance has to be included in APR, how to calculate premium in advance, since it depends on the IDV at that time. So it depends on the identity verification done at that time. So how do we compute?
That's something that I am unable to answer as to how to compute. But if you are saying that I will collect, it will be collected by me. So you're forcing as a part of the contract that borrower will pay insurance for first, second, third year also to me. That would mean as a part of loan offering, you're forcing him to pay. So probably write some estimated amount.
So over here, another important point to note is that the RBI mentioned in its footnote that if the charges are not cannot be determined prior to sanction, I have to indicate an upper ceiling. So in this case also, can I take a view that I'll consider an upper ceiling and then compute the...
Right. You can see if I were to add these insurance costs, the cost becomes huge.
Right.
If I were to add these 3,000 rupees, let's say next year it depreciates to 2,000, third year, let's say depreciates to 1,500.
So
See, the APR has gone to 22%.
नहीं वो 15,000 हो गया.
Oh, sorry. ठीक है, 1,500 कर देता हूँ. 18%. ये borrower भाग जाएगा.
When we say insurance to be included in APR in your example, it is directly related to the purpose of the loan. For example, health and however, say for example, general or health insurance offered here, whether it should be a part of APR. I think you have already explained that if you are collecting and then giving it to the insurance company, then
Therefore, it's question of practices. In the past, we were happily collecting it.
Right.
And we know a lot of large lenders were collecting insurance costs themselves and insuring themselves. I'm anyway the corporate agent. So as far as my commission is concerned, I can still get a commission from the insurance company. But we were collecting it because we thought that that's the best way to ensure that the vehicles are insured. But now that it's forming part of APR and therefore the optics have changed. Optics around this have changed completely. Therefore, now we'll have to evolve new practices. Whichever I'm saying, this 5.5 months is basically also to decide how to proceed in future. It's a question of decisioning on how will the practices evolve when this new paradigm has set in.
Shall we include stamp duty as third-party charges or not?
So if the stamp, once again, I would say I have scope for confusion here. If you are collecting stamp duty and paying it to the government, once again, it forms part of third party like you are collecting it. But why do I collect? If I can, and this amount is quite significant in case of home loans or mortgages. So if I am collecting, there is a question mark that this might still be a part of third party costs, which is part of APR. However, if I collect it in the name of the registering authority, then I can say it's paid to it's collected, not as it didn't come to me. It was payment went from the borrower to the stamp authority directly. It would therefore be preferable that we don't collect it. If we collect it, to my mind, there's a question mark.
So my follow-up question on this, because we excluded GST being a statutory obligation, we said that GST is not
on the I'm charging 3,000 on which GST is imposed. My cost is 3,000. GST I think regulations also clearly say net of GST. So GST is quite clear. I'm not excluding GST because it's third party payment. I'm excluding GST because GST is on the charge. I'm charging 3,000 on which GST is payable. So my cost is 3,000, not 3,000 plus 18%.
Point 7 mentions documents and receipts on third party charges. What is your interpretation? Because we have to. Point number 7 of the circular says that you have to provide with the borrower a receipt and related documents.
Whatever payments I'm collecting, I need to give a receipt that I have collected insurance thing. That would mean now the borrower knows that as far as he is concerned, he is paid.
Is this the receipt that the third party?
No, I'll have to give. I am receiving it. Third party did not get the payment from the. If the third party was to get payment from the borrower, then I would be out of picture. Which is what should be the recommendable practice in time to come. But as it stands, if I am collecting, I'll give the receipt because I am the one collecting.
Can we take consent upon the terms and condition and the loan agreement along with the can we take consent upon the terms and condition and loan agreement along with the sanction letter and KFS upon a single screen through a single
digital lending, that's how it will. I mean, it may be, I think, single screen or multiple screens, depends on how big your screen is. But I imagine it would happen all in matter of seconds, in matter of few views. See the terms, see the KFS, agree that you've seen the KFS, and then I agree with the loan agreement, and it probably gives some long list of terms and conditions of the loan. You are digitally signing that. Here is the loan agreement. So all of these will be like one slide after the other. I don't think it would probably be a part of the same screen, probably be a sequential screens, so to say.
And the order must be maintained, right? In case of additional service followed with loan facility offered to customer, whether the charges of additional service will form part of APR?
Should not. If it's not collateral to the loan, an integral part of the loan offering, or the subject matter of the loan, then in my view, it should not be taken as part of. I think in the flow chart, that was the first thing. Is it a part of the loan offering? If not, then it will not form part of the third party charges.
But if I am collecting it from the borrower, then?
Right, but I'm providing two services. A, I'm giving a loan. B, I'm, let's say, providing some investment advisory services. I'm charging for both. Let's say I'm having a single charge, but this other charges for the investment advisory service.
No, in that case, sir, if the disbursement amount itself is reduced to the extent of paying for those services, will that still be excluded from the APR computation?
I'll take the disbursement as a loan amount. Let's say I'm charging 2,000 for the investment advisory services that I'll provide for next 3 years, and my loan is 1 lakh. I'll compute APR on 1 lakh, not on 98,000. That would mean my APR is not including the advisory cost.
Okay. If the consent has been obtained in the app itself, we need to send it separately over an email as well. I think
as long as you're having the idea basically is to ensure that you have an acknowledgement of having seen the KFS. In what way is the acknowledgement kept in your record? I'm sure you will know better, but that would mean the borrower acknowledges that he's seen the KFS. That acknowledgement is served on him. It's also served or saved in your records. So you have a confirmation that the KFS has been seen by the borrower and agreed upon by the borrower, and then you go for execution.
And this acknowledgement can be in the form of a tick box consent or?
Properly speaking, the question is to you, Anita.
Yes, it can. In case of digital lending, since the loan agreement itself, at several times we are executing by way of I agree. So the same can be here, followed here as well. How APR is computed? Is it inclusive of insurance? I think these were questions before you explained the... And in case of bundling products, I am not sure if you discussed about the bundled product also. So the computation will be for both the products.
No, bundled product meaning there is a loan, then there is something else other than the loan. Like I took the example of, let's say, investment advisory. The example may not be a very good example, but let's assume there are two offerings. A, I have given a loan. B, I have given whatever else. Let's say I take you for a tour and I'm charging for that as well. That's not a loan offering. So that's not integral part of the loan.
And if it is a bundled loan, say
bundled loan meaning?
If it is a loan for the vehicle as well as a loan for the insurance premium.
Like I said, if the loan for the insurance, that would mean the borrower is supposed to insure with my loan. Borrower has taken a loan with which he will pay the insurance premium to the insurance company. That's almost same as the borrower insuring himself. So that's not a part of APR because with my money, the borrower makes a payment, which is why I'm time again saying that we'll probably have to evolve practices.
Right.
it was making sense to receive money in the name of the lender earlier. It's to my mind, it will not be making sense to receive payments in name of lender anymore. There are people from vehicle finance business as a part of our audience, so you can put us wise on that. Himanshuji will come back to in short while.
KFS will be issued before issuing the sanction letter. Then what is the use of this?
No, we said KFS issued after sanction letter.
If the consent
Along with or after. These were questions that I think came pretty early. Anita.
Yes.
If you scroll up, you can probably scroll down to see few questions that just came now.
Okay, this is one question which came earlier. How do we have concrete confirmation from borrower on the language best understood by the borrower? Do we keep
I think
a
you said that.
specific
You give this option to start with. Which language are you comfortable with? That's one of the questions the borrower answers even while putting his application.
Cash collateral taken up upfront, which is interest free and will be adjusted with the outstanding amount in case of default. Will this be a part of payment?
Which is, I think I mentioned a security deposit or cash collateral is the same thing. So in my view, it is not impacting that because this is anyway refundable. It's money that you're holding, which is, to my mind, I would love to include that for all in all fairness, but as the requirements stand as of now, it is not a part of the borrower's cash flow. It's just a deposit lying with you, which is refundable when everything is concluded.
Does the 3-day acceptance period or the validity period makes the facility committed during the same period from the
Anita, I would say it's because when you are issuing KFS means you have the sanction in place.
Right.
There might be pre-disbursement or post-disbursement requirements, but your commitment is there. You cannot call it uncommitted still.
So for the purpose of computing the CRAR and everything, the risk weighting will also be done as a committed facility?
3 दिन का तो बात है.
How will the existing term loan cases be looked at post October, which have the tenure of 3 years or more? Will it continue?
Sanctions already given, nothing to bother about. Sanctions given on or after 1st October needs to be as per the new requirements.
In case of vehicle loan specifically, where the underlying security is registered and the borrower is cancelling the loan and returning the vehicle also during the free look period, in this case, how do we legalize the difference of vehicle value difference in the KFS?
Sorry, I couldn't get this. Repeat the question. In case of
vehicle loan, where the underlying security is registered and the borrower is cancelling the loan and returning the vehicle during the free look period, I think this is the cooling off period which they are referring to. In this case, how do we legalize the difference of vehicle value difference in KFS? This is Bhavik G's questions in case he would want.
So I'm just trying to understand. You're saying that, well, during the cooling off period when you had the option of returning, which is only in case of digital loan. Non-digital lending and vehicle lending, to my mind, is mostly non-digital. I don't know how would somebody buy a digital. I don't know how would one buy a vehicle digitally.
So nowadays it's possible because the vehicle we don't go and select a particular vehicle. It is all online and you can just select the model.
मैं ऐसा ही बोलूँ कि मेरे को पता नहीं, but if we agree that the lending is, and I think that's where I'll first put a question mark. Ask yourself, is this lending digital? If yes, the cooling off applies. In non-digital lending, there's no concept of cooling off period. Cooling off period is only in case of digital lending. The whole thing happens abruptly, instantaneously. पता नहीं instantaneously लोग vehicle कैसे decide कर लेंगे. बात करते करते vehicle खरीद लेंगे. I think maybe things are much faster than I could probably imagine. But if it's digital lending, then the cooling off applies. During cooling off, you return the vehicle. There's a difference in the value. Of course, any vehicle that becomes second hand, there's a question of. See, I think in this case, you can easily say that I will not accept money. I don't think it would be a case of digital lending per se, because the vehicle paid जो difference आएगा, how can you ignore that? Any vehicle that bears the tag of a second hand, उसका 20% value तो गया, immediately गया. So I think it probably, to my mind, it's not a case of digital lending for this region alone, because giving a cooling off to someone who takes delivery of a vehicle and then 5 days later says, I'm not happy with the vehicle, therefore take it back.
But
all
right
I'll
now,
pay
the
is the
cooling off period is also reduced to 1 day. So I think if
therefore एक दिन में वापस देने से रहा कोई दे तो फिर I think बहुत बड़ी बेवकूफी होगी एक दिन में वापस दे देगा तो.
So cash collateral we have discussed already, but cash collateral, do we have to disclose that yes, the cash collateral has been taken in the KFS? I don't see a specific.
KFS में field नहीं है तो जो field नहीं है तो उसको चुप मार के बैठे रही.
Maybe in the sanction letter this can be disclosed.
Sanction letter, of course.
And if is this KFS validity applicable to microfinance loans as well?
Of course, yes. No doubt.
KFS has to be separately attached with the agreement. That should be consented copy. I think once it is agreed, then that copy itself can be attached, or if the copy of the KFS can be attached.
I don't know what is the meaning of that copy, but the copy is the same which is consented. That copy मतलब
मतलब
उसी
जैसे
पे
अगर signed copy है तो that signed copy will itself.
आजकल इसका कहाँ फर्क पड़ता है. जिस
हाँ.
जमाने में हम इसमें वही कॉपी लगे जिसमें साइन किया है, तो जमाना भूल गया. तो कोर्ट ही नहीं मांगती है साइन. पेन का साइन तो कोर्ट ही नहीं मांगती. कोर्ट इज आल्सो हैप्पी विद स्कैन कॉपीज.
What ROI shall be printed on the sanction letter? Is it typical APR or rate indicated on KFS?
No, not APR is not rate of interest. APR is much different from rate of interest. Rate of interest is rate of interest. APR is the impact of each of the charges that we just discussed, and therefore the final cost of the offering to the borrower, which is purely for borrower comparison purpose. It's not ROI. ROI is the actual rate of interest. Like in my example, 14% was the ROI. APR was coming in some cases to 20% also. APR is not ROI.
So you are saying that in the sanction letter also, if we are disclosing, maybe we can disclose both of it and distinguish between both.
Sanction letter, why do I have to disclose APR?
Definitely.
APR is a computation which I'm giving for comparison purposes.
Okay.
To make the borrower, I mean, this lender versus that lender comparison. So what is needed for KFS is limited to KFS. It's not neither a part of the loan contract. It's not rate at which overdue charges, for example, will be levied, etc. It's a complete. So APR for KFS purposes is a disclosure required for borrower information and comparison purposes, for no other purpose.
What if the borrower can't read and write? Signing declaration is treated as
I think we
compliance.
discussed that.
How can this be managed in typical vehicle loans where the amount is usually disbursed to dealer account? Waiting till the validity period can increase the loan disbursement TAT. So I think in vehicle loan, the TAT should also be computed from the date the borrower has accepted the KFS. Or I'm not
because
sure.
we're talking about a 3-day validity. So within 3 days, the borrower accepts, doesn't accept. If doesn't accept, then, well, you have the right to still, I mean, extend the validity. So 3 days is the minimum. If you want to keep it longer at your discretion, you can keep it longer.
No, I think the concern is that the TAT itself is getting increased because maybe the disbursement TAT increases if the validity period is more.
No, if I'm saying, let's say 3 days is the validity period and the borrower accepts it today itself,
then I'll have to
I'll then disburse the, so I'll complete the loan immediately. I have to keep the terms fixed for next 3 days. That's the impact of the validity period in my view.
If the borrower cash flows are not uniform, are not at uniform period of time, can we use the nominal XIRR formula?
If you're using XIRR, then you'll have to do, because XIRR is higher than APR. XIRR is annually compounded. If you compute XIRR on Excel, you'll find it's higher. It would be at least 0.5% higher than the APR. So in that case, unless you want to dissuade the customer, XIRR is not the actual rate, it's the annually compounded rate. So in my view, you should then transform it back to a periodic rate multiplied by, if your period is month, for example, transform it back to a monthly rate and then multiply by 12, because XIRR itself is an annually compounded rate. Yes, nominal formula can also be used. You're right. Jatinji is helping me to answer a lot of questions. I think half the question he's answered anyway.
How broken period interest would impact APR?
If, like I said, if there were no other upfront charges, then broken period being at the same rate as IRR will not make a difference. I showed that in case of broken disbursements, or maybe similar example in case of moratorium as well. But because APR is different from the ROI, rate of interest, therefore broken period will make a difference on APR computation. Therefore, you'll have to compute IRR showing the broken period interest and then the regular inflows. IRR computation, APR computation will be impacted by the broken period. Even though the broken period rate of interest is the same as ROI, yet it will make a difference because APR itself is different from the ROI.
If borrower cash flows are not, I think we have discussed, as per SBR, NBFC cannot route insurance premium payments until NBFC is insured.
Sorry, say it again. This is very interesting question. What is
As per SBR, NBFC cannot route the insurance premium payments until NBFC is insured. I think they mean that it is NBFC is into.
NBFC is the insured.
Huh.
Is that actually correct? I don't think so.
No. So, as per the regulations, what I can do is I cannot be. So there is a timeline under the insurance. If you could maybe.
Corporate
under
agency
the-
rules you're talking about. Okay.
Right. So we have to. Usually, what we do is that keep a kind of a amount with the insurance company.
What I think the regulation requires the same day I should make a payment. I think within
24
X
hours
number
or
of hours, 24
Huh.
hours. And the 24-hour rule is anyway very difficult to comply with. Therefore, mostly
They
the
keep
corporate agents keep a float,
right.
which is sufficient to discharge the. That's a usual practice.
Does that mean only personal loans are covered under digital lending?
Digital lending itself is covered, irrespective of whether it's personal or non-personal. Digital lending, the whole ecosystem of digital lending is covered by KFS requirements, because digital lending guidelines the part that was talking about KFS has now been replaced by these KFS requirements. That would mean digital lending as a whole is now amended to incorporate the reference to this KFS requirement. So
No,
whatever
I think the
was
question is because you were mentioning that vehicle financing cannot be a digital lending. You don't think so?
I don't know whether vehicle financing can be digital lending or not. I'll be happy to understand, but to my mind, it should not be. But if
I think digital lending in itself, the topic we'll have to maybe evaluate. It's very subjective.
separate workshop करना पड़ेगा उसका.
What should be the maximum and minimum validity period? 3 days दिया हुआ है, maximum तो नहीं है, minimum.
Maximum is up to you.
मतलब
Maximum
अगर
आपको
7
तो
days
करना है,
से
keep
कम
it your
का है,
discretion.
हाँ
7 days से कम
maximum.
हो तो एक दिन का होगा.
हाँ,
7 days से कम का लोन तो कौन सा होता होगा. But anyways, अगर 7 days से ऊपर का लोन है तो 3 days का minimum आपका. And you would like to keep it longer, then I would say you keep it at your discretion. Lender may, at the lender's discretion, agree to accept an acceptance done by the borrower even after 3 days. So you keep your options open.
Will
So that you
issuance of
don't need
new.
to give a fresh KFS every time.
Right. Will issuance of new KFS also required in case of increase of credit limit of existing customers on or after
That's what we
1st
mentioned.
October?
If on or after 1st October, you're increasing credit limit. In my view, it's a fresh grant of credit, and therefore a fresh a KFS as per these regulations will be required.
I think Himanshu ji is raising his hand and the questions on the chat is complete from my side. So I can
Himanshu
ask.
ji, yeah, Himanshu, you got
Yeah.
mute already.
Good evening, sir. Am I audible?
Yes, sir, you are audible.
So you have responded to one of my question regarding this broken period interest. So you rightly pointed out that assuming there were no upfront charges, and in that case, am I audible clearly to you? Yeah. So in case there is no upfront charges, so ROI and APR would be same. So in that case, I would like to ask you that if APR comes when the upfront charges comes into picture. So this broken period interest is something when my disbursal date and my EMI date would be different. So how this broken period is making the APR? I mean, it is impacting the APR in that case, even if the APR upfront charges would be there.
It's actually, I mean, computational, Himanshu ji. You can see the computation. You can do a computation yourself. You'll be able to see.
Okay.
Because the computation is that as per the engine of that is the underlying logic of IRR computation. APR is actually IRR. As per underlying logic of IRR computation, every cash flow is discounted the same rate as the IRR, which means every cash flow is getting discounted at the APR. And broken period interest is not at APR but at ROI. So the interest is computed at ROI but gets discounted at APR. Hence, it makes a difference.
Okay.
That's the underlying mathematics. But you could probably just do an example yourself. You'll be able to realize.
Understood. And sir, the another thing which you touched upon that in vehicle financing, you don't see that there could be a possibility of digital lending. So I tell you the situation. If a customer visits to a dealer, if he selects a product that I wish to buy this product and he finalizes the thing, then I think the customer journey would start from the maybe a digital application which may be available to a dealer, then the NBFC who's, I mean, if dealer would be, I think it's an LSP. So in that way, I think the digital journey of the loan can be started up, and it can be completed. I mean, I need
Sorry,
to see your
while
insights on that.
while we can park the question for, like Anita said, it's a detailed discussion, but in short, merely because some part of the customer journey is digital, there is no lending today where no part of the loan journey is digital. Therefore, every lending should be digital lending. But basic idea basically is the credit decision making. Was that
Mhm.
digital? Was the loan processing, that is the decision to grant credit, was that taken digitally? If yes, then it's digital lending. I mean, that's to my mind, that's of the 5 or 6 factors, the most important factor is the decision to extend credit completely digital and software driven, or is it based on someone taking a credit? I mean, is it based? It's a man-made decision or machine-made decision? If it's machine-made decision, then probably it would be digital lending. But I think, to my mind, to put it differently, it would be safer to argue that vehicle finance is not digital lending, because the implications of making it digital, to my mind, will not be very happy.
Okay, understood.
Because
Thank
then
you
the
so much.
cooling off applies. The customer आज गाड़ी खरीदेगा, कल जाके वापस पटक देगा.
Understood. Thank you, sir.
Anyone else who would want to maybe speak and would want to be unmuted?
In terms of content, Anita, I think you had discussed the contents of KFS. Do you have anything further to add on the contents, or you're largely done?
No, I think largely we have discussed all the contents also during the discussion. The
I think
only point that
actionables would include, yes, of course, you need to see systems will probably need some kind of updation, some kind of change, because you'll have to create capacitation in the systems to compute APR. And Anita says that the board should also take note of this new requirement and then formulate an action plan, because by September 30th, it should be in readiness to implement it from 1st October. Wherever there's implementation from 1st October, we need to be ready so as to start running as per the new requirement from 1st October, which means dry runs must have been done before that. And that is quite a lot of work, because in many cases, even the practices, like in case of third-party payments, the practices also will have to evolve as per the new challenge. Mr. Monty, if you can, somebody can unmute Mr. Monty, please.
Yes, Mohan. I think Mr. Mohanty, you may unmute yourself. I've allowed you. Yeah.
Yes, Mr. Monty. You were unmuted a minute back, but I think once again gone mute. Anyone else who has anything to say, or are we? Mr. Monty is still trying to unmute himself, maybe.
Yes, Mohanty ji, you have unmuted yourself.
Yes. Good evening, sir.
Good evening.
Sir, I'm thinking if in case of that earlier we have discussed, if any, suppose any pre-disbursement, we are charging something to the customers. Okay, it's related to that pre-MI. This. I'm thinking in that case, suppose for example loan is 3 years. Suppose I have given some means due to the EMI date and the disbursement date, loan is increased by another 5 days or 10 days. Okay. In that case, the means IRR and API, it will be not differ because rate will be remain same 14%. Okay, instead of say loan tenor is 3 years, it will be 3 years or 10 days.
ROI will be the same. APR will change.
Sir, how APR will be changing if suppose it's instead of 3 years, it will be 3 years, 10 days, say, for example.
So, sir, like I mentioned earlier, if the APR and IRR meaning ROI, are different because of upfront charges, then any tinkering in the payment schedule will also make a difference on the, will also further impact the difference.
Okay,
In
assuming that there is no other charges.
ROI and APR are the same, then nothing will make a difference. APR will not be impacted by any change in either the term or the disbursement date.
If there is no other charges, then there will be no difference.
Then APR and ROI are the same. And therefore, even if we delay the disbursement or have multiple disbursements or extend the disbursement by few days, even by few months, it will not make a difference.
Understood, sir. Thank you.
Sure, sure. There was some question that I think Veena ji mentioned on chat.
In case, last two questions. In case of demand loan, which are digital in nature, the ROI is charged only on the disbursed amount and not on the sanctioned amount. So how will the APR be computed upfront?
It's very interesting. You are saying you would have given a sanction, say, for 1 lakh, but the
will the APR not be computed considering that the entire amount is disbursed, because APR is.
I think if you're asking the customer to sign a KFS, you are committed to disburse the entire amount.
Right.
So you will have to compute APR assuming that the entire sanctioned amount is disbursed. That's the only way we think it can be tackled.
And if it is a top-up loan in same loan account number after 1st October on existing loan, then no need of KFS?
Will be needed. The top-up loan will have its own terms. Rate of interest is different. It's top-up after it was not agreed in the. It's an additional facility on an existing loan. Therefore, in my view, KFS will be required.
I think with this we can conclude the session for today, and we'll thank.
Some people asking, will the PPT be available? The PPT will be uploaded on our website. Yes, PPT will be available on the website. I think our colleagues will try uploading it today, if not by Monday for sure. And thank you very much, all of you, for joining. It was short notice, yet very interactive and extremely educating participation. Thanks a ton, everyone. Thank you.
Thank you. Thank you, everyone.